Welcome to today's video. In today's video, I'm going to be doing a trade recap of this trade right here. This made me just over $700 trading the S&P 500, and it was a beautiful setup. Let me not lie to you guys. It was very simple, and I'm about to break it down for you so that you can take trades like this as well. Let's get right into it. Get ready to lock in. Firstly, I want to start off on the hourly time frame. Now, looking at the hourly time frame, I was very bearish. We can see that in pre-market, we had a huge sell-off. So going into market open, I was thinking, we have two options here. We either get reversals or we get continuations. Which one of the two is looking more likely? Now, looking at the S&P 500, I was thinking, okay, well, where does the market want to go? And in this case, it was quite obvious to me that the market wanted to come down to these lows. At market open, we were around here, but I knew that we wanted to come down here. Now, why did we want to come down here? Let's drop down to the 15-minute time frame and I'll explain to you why. If we look at the 15-minute time frame, we can see that we have this weekly opening gap right here, right? We have this big gap or this void in the market. That is an imbalance. Now we can see that that imbalance has already been filled because we came down, we retested it with this low, and then we got this huge rejection. Now, this low right here isn't just any random low. This is a strong draw on liquidity. This is what we call engineered liquidity because it is the low within the fair value gap that caused that rejection. Now, here's what I was thinking. I was thinking, well, okay, we probably want to get a continuation down towards that engineered liquidity, but is there anything else that we want to target? That is where this indicator comes in handy because we can see we have London lows right here. We have London lows that are unswept. So I was thinking, wow, even more reason for price to come down and take out these draws on liquidity. So that is why going into market open, I was bearish. Now, because I was looking for a continuation sell, what did I need to see? I wanted to see price pull back into a higher time frame fair value gap and then give me a rejection. Now we can see with this example right here, we had this bearish 15-minute fair value gap. We can see that we retested it at market open, and then we got this lovely rejection. So now I'm thinking, oh my goodness, we can look for sells. Now let's drop down to the 1 minute. The 1 minute is looking super interesting as well because you'll notice that I have this right here. This right here indicates that we have a bearish SMT. You can see that on the S&P 500, we have a high and we have a lower high, and then a lower high. Then if we head over to the NASDAQ, we have a high, and instead of a lower high, we have a higher high. So that right there is a bearish SMT. That is a clean bearish confluence. That means I now want to look for sells. Then what did I wait for? I wanted to see a 3-minute or a 5-minute fair value gap get inverse to confirm to me that we were flipping structure from bullish to bearish. And as you can see, this 3-minute bullish fair value gap here that was previously respected once and twice got inversed with this candlestick closure. Once we inversed it with this candlestick closure, I thought, perfect. Let's drop down to the 1 minute time frame. Let's wait for a retest. Let's wait for a rejection, and then we can take the sell. As you can see, we have this bearish fair value gap. Price came in, retested it, weak rejection, weak rejection, weak rejection. I wasn't really comfortable with them until we got this rejection right here. And I was like, yep, perfect. So I entered in my sell position here. I was targeting those lows that I mentioned earlier that we can see on this left-hand side. I was targeting these lows right here, engineered liquidity and those London lows. And as you can see, price went straight to full take profit in around 4 minutes. It's insane how quick price just dumped. You're probably wondering, well, where did you set your stop loss as well? Well, I set my stop loss just above this 5-minute bearish gap. You'll notice that we have a 5-minute bearish fair value gap right here. So I set my stop loss just above it because I was aware that market might want to retest it, then reject. And that way I was protected. And that's how I like to set my stop losses. I like to set them as safety nets. Imagine them as a security guard that is stopping price from breaking through. Now, if price manages to defeat that security guard, well, then guess what? I was wrong about my bias, and we're probably just going to run through all the way higher. And I have no issue with that. I'd rather be extremely wrong than get tapped out by 1 pip and then price head to 40p. But as you can see, we didn't even retest it. We just clearly got this rejection. Bang. Dump straight to 40p. this trade had a bit of everything, guys. It also had equilibrium in it, which is my favorite confluence. If we mark out equilibrium from the highs to the lows, you can see price comes down, pulls back into this discounted zone. We have this bearish SMT. We also are respecting this 5-minute bearish fair value gap. We then get that 3-minute inversion. We get that 1-minute retest and rejection, and then we catch those sells, guys. It's as simple as that. I don't want to say like, oh, this is super easy, but it is quite simple. I had marked this out even in pre-market. Like if I head over to my Discord now, just because why not? If you see my pre-market analysis section, I said this is what I thought was going to happen. I said we were going to tap into this 15-minute bearish fair value gap, which as you can see, we did tap into. Then I was like, we're going to reject down to London lows and towards that engineered liquidity. And that is exactly what happened. And you can see right here, tapped into it, got the bearish SMT, straight dump down to all these lows that we had marked out. So guys, I don't know, call me the market maker, but today the market got read like a book. And that is what we love to see. I love reading the market like a book. And I also love helping you guys and teaching you about how to read the market like a book. So if you've not watched my other YouTube videos, then what are you waiting for? This trade made me $750 right here, which I absolutely love. And I hope you guys could have taken a win similar to this today. So let me know how your trading session went. If you like this video, you want to see more trade recaps, then please drop a comment below. Subscribe to the channel if you're not yet subscribed. Like the video and just let me know in the comments what you think. Did you enjoy the trade recap? What could I have explained better? But yeah, again, appreciate you all for joining. I will catch you in the next video. Peace.